Hey guys, and welcome back to Smart Money Minds. Today on July the 23rd, 2021, we had some major news for Chinese tech stocks and actually for the Chinese education industry. We're going to go over what happened, what was the result of this news, and the game plan coming up. Is there an opportunity here for these plays to work out? And just to give you my insight about what you should do if you're holding some of these stocks and what you should do if you're looking for these opportunities to get back in for a good play. For those who's been following me for a while, then you know that I've done multiple Chinese tech stock videos in the past, and I've been talking about what opportunities there were, how the Chinese government has been affecting these tech stocks. So take a look in the description below. I'll put links to it if you are just joining me, and look at some of those videos before checking this video out to its completion. So what happened here with the Chinese government is that they're asking educational companies to go non-profit. So that was one of the biggest news. And a second kicker for this news was that they had an announcement on these Chinese regulators had an announcement for Didi, which IPO'd quite recently, for big penalties. They're bigger, even bigger than Alibaba's penalties. And with this overhang is starting to expand from tech to education, and all these regulations are cracking down, and so it's leading to fear in other industries, especially in the electric vehicle industry as well. So we're going to go over some of them were Li and NIO. These were announced overnight in the Chinese market while we were all asleep in the North American market, and basically Chinese government wants to turn them into non-profits. That's killing a $100 billion industry if they decide to do so. So that's why there are huge drops in the market today. Looking at the second news is Didi shares drop because China is planning unprecedented penalties that are even bigger than Baba's or Alibaba's $2.8 billion fine for their antitrust. So these penalties can also include suspension of operations, delisting, and withdrawal of Didi shares. So this is what's really concerning for most people. So now with this major crackdown, we got XPEV, Auto, or NIO, we got Li, all are being hit hard by this sort of news. Maybe they're cracking down on the EV sector next, who knows? And that's where we have huge percentages down on TAL, GOTU, EDU, Didi. Everything was down like big percent. TAL was down 70%. Chinese auto hit a little bit hard too, down 8 and 4%. Not huge, but still painful. Out of all the stocks that I've watched on the Chinese market here, pretty much literally everything is red today due to just the scare of the Chinese regulators. They can pretty much do whatever the heck they want, and it's going to tank the stock. You got all these that are down, more than 10%. Beely, BZUN, Didi, all these guys are mostly educational stocks. With these Chinese stocks, I'm going to go through some of the technical analysis and let you know what sort of observation I'm seeing here besides the hype news that's driving the price down. So with TAL, we had this support zone here that was holding on the weekly, which was around the $18 to $21 range, which as you see here, it was holding on quite well for this whole period of time before we had a major news gap down. Okay, sure, we have the RSI oversold in pretty much every time frame. It's out of the third deviation lower Bollinger Band, so it looks like it may bounce, but that's what happened is when we opened and all these things were way out of range already, and it continued to sell off with major bear volume. GOTU, which was formerly GSX, has been in a downtrend this entire time since January of this year. So it's given back pretty much its entire gains. Okay, it's very, very scary. It's dropped basically almost 100% and 97% from the top. We had this one pattern that formed up here, which was the daily falling wedge, which is a bullish pattern. However, look at when it broke bullish, there was basically no volume to support this move, thus dropping the price back down right here. We had daily bullish divergence, so divergence here, and it did give a little bit of a bounce, but look at what happened. So there was no bull pressure whatsoever, and now it's dropped another major percentage from yesterday, which is it drops 60%. EDU, massive gap down. Once again, the falling wedge was forming in this zone here that I was watching. There was a falling wedge, but that broke bearish, and it did give a bounce here from $2 back up to, you know, $3 after hours, but it's not convincing. I wouldn't really want to get into the stock because look at it, it's pretty much back down to all-time lows. All-time lows is this range here at $1 to $2, which was trading for a long period of time, and now it is at $2.93. Now with Didi, we had a support zone right over here, $10, $11. Basically, this couldn't break down, but as we can see here, there was a bit of a descending triangle. So it kept hitting this zone here until it waterfalled through, and this confirmed this pattern here for the descending triangle. The question is, what's the game plan? What are you going to do if you're holding, if you're not in? So my advice is, if you're holding, just keep holding. I mean, if you look at it, the stocks right now are at $6, $3, $2. It's almost to zero. So in a sense that there's no reason not to hold, but I would definitely not recommend adding until there's a clear trend change on the stock that it's going to go make higher lows to higher highs, and at least on daily time frame before I plan to add any sort of position, because this sort of averaging down is how you blow up your account very, very easily. In my experience, there is a good chance that these prices can stay at these ranges for a long period of time. And chances are you're already in a very big red losing trade. So no reason not to keep holding. It could bounce, who knows? And if you're not in the trade already, if you don't have any shares, you're thinking of playing an oversold bounce, I would recommend you not to play it until there is a clear trend change. There may be a good oversold bounce opportunity coming or on its way, but I would recommend play small as well, because the issue is there's just no confidence in the Chinese government, and there's too much uncertainty about these companies. One overnight thing one announcement can basically drop a stock 50, 60, 70%. So that's very, very dangerous. Overall, just be very, very cautious. This is highly manipulated by the government. So I don't care about their earnings or fundamentals. Like, the company could be doing fantastic. It doesn't matter, because it could just all be messed up by the Chinese government. For example, if an EV company does really well, the Chinese government can come and say, oh, I'm going to nationalize that. Then it's screwed. I don't believe that any of these businesses will go under in the country, but this sort of overextension is beyond technical analysis. It's just hype news related, and it's just not a healthy stock trading environment. And because this is just not following US accounting rules and other uplisting standards, these stocks can very well be delisted. The only interested stock I would be looking at is Didi, because they're announcing they're going to have major fines for it. But the same scenario has played out before for Alibaba. So let's take a look at Alibaba. Alibaba on April the 12th here had accepted a Chinese fine, and when that happened, if we look on April the 12th right here in this area, it had a major bounce, 8% bounce back up. And that's with volume because the fine and the overhang is now over. There's no longer that uncertainty of how much is going to get fined. They know it's happening, and so investors become more confident. But at the end, what's happened here is even though it made a major bounce, look at the trend. It continued to come back down, There was still that overall industry overhang that did not give confidence to investors. So this may just be very well a short-term bounce before fading. In the comments below, I want to know if you're still holding on to any of these Chinese tech stocks that got hammered today. Did you sell for a major loss? And what's kind of your game plan moving forward for this? I mean, I'm very sorry that you did get trapped due to this news, but I still want to know how you're going to do moving forward. What's your game plan planning for this? And how are you looking to move forward from this? And what's your opinion for these Chinese tech stocks still? If you enjoy my videos, hit that like button, subscribe to my channel, and we'll see you guys next time.